Hi there. Hi there. Welcome to another live webinar with us from Phillip Futures. My name is Sri and I'm your facilitator of the day. Today we will be having a very special guest by the name of Mr. Jose Blasco. He's the principal of Predictive.com. I'll tell you more about him in a short while. Today's topic is the Micro Asia Tech 30 Index Futures. Learn how to trade the volatility and trends of Asia's tech giants. Alright, so in today's session, we will cover the Micro Asia Tech 30 Index Futures and tell you more about the exposure to 30 highly traded Asia Pacific listed technology and tech related companies and how you can trade it in a capital efficient manner. The points that we will cover: how do you capture opportunities with the index, how to gain exposure to the technology industry without missing a relevant component, how to be diversified while executing trades and gain exposure to the most relevant instruments. And now, a little bit about our speaker, Mr. Jose Blasco, the principal of Predictive.com. Jose is a multi-asset trader who specializes in options, equities, futures, and currencies. He began trading in 2008, and since then he has accumulated a wealth of knowledge on global markets, trading both directional and non-directional strategies across multiple time frames, And since 2018, Jose has developed an innovative trading technology. He has developed innovative trading technology as the principal of Predictive Private Limited, where he also mentors traders worldwide. And Jose, if you're all set up and ready to go, I can give you presentation rights. Jose?
Hi everybody. Definitely it is my pleasure to be here, and thank you so much, Sri, for such an introduction. I am just wondering if maybe Ian from ICE would like to start the presentation. Ian, would you like to do that, or would you like me to get started?
Sure. Let me do a short introduction. Just let me show my screen.
I'll be back with you guys.
Yeah, I hope everybody can see my screen. Again, thank you, Sri and Phillip Futures, for having me. Always a pleasure to be able to showcase our products to Phillip Futures clients in their webinars. My name is Ian C, and I represent ICE Futures Singapore. And welcome to today's webinar. So for today's presentation, there will be two parts. I will give a short introduction to ICE Futures Singapore, the products that we have, the Micro Asia Tech Index and its methodology, and some of the components that is a part of this index, and the overview of the futures products or the futures contract. Then followed by our main speaker, Jose, from Predictive.com. That Predictive.com is actually our main education provider for ICE Futures Singapore. So let me start off my presentation. I hope everybody can see the screen. So on ICE, let me introduce ICE Group as a whole. So ICE Group as a whole, we actually operate 10 different exchanges, each in its own jurisdiction. And if you have been trading.
Hi, Ian, this is Jose. Sorry to interrupt you. I believe you may be sharing your other computer screen instead of the, I guess you should have a PowerPoint presentation on the other one. Yes, exactly. Yeah. Now we see it. We see the presentation mode. That's what we see. We don't see the
the other.
Do you see this now?
Yeah, this is good now. This is perfect.
Okay, I don't know if I can move this away. Oh, no. Okay, I'll continue. So ICE Group actually operates 10 different exchanges globally. And if you have been trading on some of our products, you should be very familiar with our sisters exchange in ICE Futures US, ICE Futures Europe. For example, the ICE Brent Crude, which is one of the benchmark products on ICE Futures Europe. If you have traded on our soft commodities suite in ICE Futures US, you should be very familiar with what ICE has to offer. And on ICE Futures Singapore, this is the Asia Pacific exchange that we have on ICE Futures Singapore. It is operating in Singapore and, of course, approved by our regulators since 2015. The main purpose of ICE Futures Singapore is really to target the Asian traders, providing global benchmark from all our different sisters exchange, as well as our own products on for Asian hours. So all our contracts are cash settled. They are mini contracts, and some of them are based on our successful ICE US and ICE Europe products. So very quickly, I'll give you an overview of what the products that we offer. So as you know, during this period during the pandemic, three themes have been always three very popular themes in the market that we're always hearing: digital assets, ESG, and technology. So actually, on ICE Futures Singapore, we have two out of the three, and possibly one coming in the future. So in terms of digital assets, we have a Bitcoin futures contract. So there's one Bitcoin in size, it's cash settled. And if you have been trading on the USDX, the dollar index, we have a mini version. There's 1/5 the size, cash settled as well. And we have several popular FX products like the mini US dollar Sing and the mini dollar CNH. Those are two of our more popular FX products. And we, of course, we have a mini energy Brent contract. There's 100 barrels compared to the big contract in ICE Europe, which is 1,000 barrels. And of course, recently, and this is the main product focus for tonight's webinar, is our Micro Asia Tech 30, which was recently launched on the 26th of April. As you can see, we are a very young exchange, and some of the products are very, very new. For example, like the Bitcoin was launched only in 2019. The mini dollar Sing was only launched also as well in 2019. So the volumes are not going to be huge, but they are respectable. On a daily average, I've listed some of the volumes down. For Bitcoin, for example, we get over 1,100 overlots traded a day. You'll see very low open interest because most of them are day trading, and all these are happening during Asian hours in our time zone. Our dollar index gets about 1,300 lots a day. Our dollar Sing is about 2,006. Our US dollar CNH is about 2.6K as well. And our most recently launched product, our Micro Asia Tech 30 Index, which was only launched about on 26th of April, we get about 700 lots already. So let me go into the index itself, a bit more on the index. So the methodology, I think, is important for the index. We want to make the main focus of this index is to capture the performance of the 30 largest tech companies by market cap on Asia exchanges. So these Asia exchanges, there are 6 Asia exchanges. They include Japan, Korea, Hong Kong, of course, Australia, Taiwan, Singapore, and Indonesia. But not every company, a tech company, will be included. So these are the criteria, right? So our aim is to make sure we capture the performance of the top 30 technology companies that we have in Asia, in APAC. And these are the criteria. So they have to be in technology. It has to be in media and communications, or consumer discretionary sectors. So these few sectors, the company itself, the filter is the minimum market cap has to be 5 billion, and the minimum average daily trading volume has to be 10 million for 3 months. And in terms of the free float, it has to be at least 5% free float. So we included all these 6 exchanges, currently excluding Shanghai and Shenzhen. And if you were to, if you are traded in the technology Asia Tech, you know that you'll be in Hong Kong dollars. You have issues with currency in Hong Kong dollars, Taiwan dollar, all the different currency. So what this index does for you is all the whole index is in US dollars. So we convert all the currency with the exchange with the exchange rate, and it goes into all US dollars. So you don't have to worry about any currency issues on your side. So let's see what actually made the top 30 technology companies of this index. So as you know, the world is facing semiconductor shortage. So therefore, Taiwan semiconductor manufacturing has been always in the news. It's been a very active contract. So Taiwan semiconductor manufacturing is there, and of course the top 3 China companies that's listed in Hong Kong, Tencent, Alibaba, Meituan, makes up the top 10 for sure. And you look at the exchange weights, of course the Chinese companies are very dominant in that, those that are listed in Hong Kong, followed by the Japanese tech firm. You can see Sony, Nintendo, they're all there. Korea comes up into prominence as well. The likes of Samsung, they're in the index as well. And Taiwan, of course, the Taiwan semiconductor manufacturing gets quite a heavy weightage currently. So like I said, the sector exposure are in these 3 sectors. And what I would like to point out is actually for this. Oh, sorry. Apologies, just let me get back to my slides. So let me point out this part to you. There's a very unique feature of this index. There is a rebalancing that happens every quarterly. So the 3rd Friday of every quarter, the index rebalances. And so we're coming up to one. There's a next Friday. And that will, and those filters, like we have mentioned here, if they don't meet the market cap, they don't meet the minimum average daily trading volume or the free float, or they get reclassified in certain sectors, they'll be taken out of the index. Or as you currently are aware that in the US there's a restriction list in terms of some of the tech companies. If those are included, those are in the restrictive list, they're also taken out of the index. So this, and the whole purpose of this rebalancing every quarter is to make sure that we really align and capture the performance of these top 30. They are the top 30 largest technology companies in APAC. So it can be of any of the 6 exchanges. If they meet the criteria, if the tech company meets any of these criteria, they will be included in the index. And I move on to the futures contract. So for the futures contract, this is being offered on ICE Futures Singapore. It is the notional value. It's about US dollars 10,000. The minimum tick for every 0.5 movement is US dollar 1. The multiplier is 2. Right now, the index point is 5032. So you just multiply by 2, you get the contract value, which is 10,000. It's a monthly contract. And the initial exchange margin that we charge is at 464. So for only 464 US dollars, you get exposure to 30 of the biggest tech companies in APAC at a notional value of about 10,000 US. So this contract is really suited for the retail participants or day trading, because it's very easy to get in, very small initial margins to get in. In terms of the trading hours, though it's stated from 9 a.m. to 6 a.m. Singapore time, as this is a very new contract, we have a very tight window of trading time. So it's from 9:30 all the way to 4:30 Singapore time. So this is when the cash market is open. So we not only have one market makers, we actually have two market makers that's quoting on this time frame. So if you're interested to look at the contract and you want to participate in this, 9:30, 4:30 p.m. that's the time where most of the liquidity is in. Before I finish, I just want to give you some additional resources. On this page, you can scan the QR codes. The first one is our ICE Futures Singapore website. We have created a dedicated Asia Tech 30 website where most of the information, in fact, all the information that I've spoken of, can be found on this website. And also on our website, there's also a Bitcoin market commentary weekly newsletter. This is free for you to subscribe. It's actually written by Predictive.com, the people from Predict.com, who's our main education provider. So they write this on a weekly basis, free to subscribe. It gives market commentary on the Bitcoin. It gives technical analysis on a daily, weekly, monthly, and even some educational bits about the Bitcoin, about Bitcoin. So if you're interested, please scan some of this the QR codes. It will bring you to the link, and you can see and all this information that I've just spoken. I will just hand off to Jose for the main part of the presentation. So he will share with you his trading strategies in the Asia Tech 30, which is a very new contract, and how do you trade in this new contract. Jose?
Wonderful. Thank you so much, Ian. I am now sharing my webcam stream, and I am now about to share my screen as well. Just 1 second so I can begin. Here we go. That would be the one. So I believe that you guys should be able to see my screen. It would be great if you can have a quick confirmation, so I know that you see my screen as well as you see the webcam and you have the sound.
We can.
Yeah, thank you so much. Wonderful. Well, thank you again for inviting me to be part of this presentation today. It's a pleasure for me to be part of it and to share something I'm very passionate about, which is trading and the markets and futures and the right products, and definitely today talking about this very, very smart product with Micro Asia Tech 30 Index Futures. Is really something I'm excited to share, okay? But anyway, just to be formal, on the upper part of my screen, you can see a disclaimer, which I am highlighting right now. So please read it carefully. This is important information. As all financial presentations, there is always a disclaimer. So I would like you guys to read it, since, as I said, it's important. My name is Jose Blasco. Shri did an incredible introduction of myself, so thank you so much for that. You can see my email on the screen, jose@predictive.com, as well as our support team, which is support@predictive.com. So if you guys would like to have a copy of the slides that I'm going to use today, if you need anything from us, feel free to contact, and definitely delighted to give you more information, work with you, clarify doubts or curiosities, you name it. with all of this said, let's take a look at what I have planned for today. So first we'll have a very short introduction, then we'll get into ATI. ATI is going to be the short way for me to say Micro Asia Tech 30 Index Futures, because ATI is actually the futures symbol that we use to trade the Asian Tech Index. Okay, so if you hear me talk about ATI, you know what I'm talking about. So we'll look at the key things to know. We look at how to swing trade it. How can you expose yourself to such a smart instrument where you are exposed to the most relevant companies in the tech industry in APAC? How can you use that power, if you wish, for your trades that are trades of a multi-day, multi-week durations? How can you do that? But also we look at the complete opposite, which is how can you get active trading such an interesting product, and how can you trade intraday ATI? So I'm going to show you both angles, because definitely the product really opens the door to both. Having those fundamentally strong companies built in the index, opens the door for holding those trades for longer, but also having a well-regulated asset that trades in a serious exchange that has a decent level of volatility, also allows you to catch those intraday move, pretty efficiently. So I would like to share with you both angles on how to approach it. So first, I will do that from a, let's say, theoretical point of view. I have examples that are on the slides. That's why I said if at the end of the presentation you'd like to have a copy just to review what you learned today, again, happy to share. But also, most importantly, after we go through those materials, we'll jump into the real-time charts and basically apply what we learned today, real time, okay? Bonus for you, you'll see what I mean by that later on. We'll have some additional materials for you, and it's going to be very useful to you guys, and I'll share that with you later on, as well as some more, let's say, formal educational resources that I would like to share with you as well. So beyond what you will learn today, you can equip yourself with all the tools needed, to master trading if you are new to the market, or to just keep improving what you do, and specifically when it comes to applying it to ATI. At the end, we're going to have Q&A, but at the same time, feel free to type your questions during the presentation. Please do not be shy. I am happy to read your questions. If I see the answer is coming later, and you feel I'm not answering you, is because the answer is coming later. But for sure, I'll keep an eye on the chat box. So feel free to type, and if any at the end, I will go back and review all the questions, so nothing is left behind and all the questions are answered. Okay, so counting on your participation. And also, maybe because I'm very passionate about trading, I have this tendency to speak just a little fast. So if it's just a little too fast for you, feel free to type it on the chat box, okay? And I will repeat or slow down, because again, I just want to make this session count as much as possible, okay? Anyway, I will skip my introduction. Again, Shrey did an incredible job. I love trading. I trade all the assets. Certainly, we know as traders, just like if you're a driver, you need to use the right vehicles. You may be extremely knowledgeable, but then you end up trading a product which is maybe not well regulated, or whatever. You end up getting in trouble just because you're using the wrong vehicle while you are a good driver, right? So with this analogy, again, trading products in Singapore, it's really taking a step in the right direction for sure, because MAS regulating the exchange, products traded in an exchange. Everything is audited, everything is under control. That creates a lot of safety net, if you wish, for traders looking at trading seriously. Okay. Our company, Tradictive, you can find everything we do in a website called tradewithufos.com. You have a QR code that you can scan and get to take a look at our website if you're curious. Talking about being curious, you may be wondering, what are those UFOs? Well, I won't be talking too much about it today, to be honest, but you can find more information about it on our website. They represent on-field orders, and they look like flying saucers on the chart. So that's why we call them UFOs. You can see a little example there. But again, it's not the topic for today, so I will let you explore it on our website, and for sure, feel free to send questions via email if you have. So things to know about ATI. Okay, so what are some of the key components? Well, the symbol is ATI. You need the ticker symbol to be able to trade it. So it's ATI. It's a unique contract that trades on ICE Singapore Exchange. And unique means it's the only place where you can find it. But unique also means that it's created in a unique fashion that makes it extremely powerful. And it's really new because it was launched on April 26. Okay, so it's one of those key products, unique opportunity, if you wish, in the sense of taking advantage of a let's say a kind of like a hidden golden nugget in the market that, you know, if you were to put it yourself together, imagine how many trades you will need to take, how many accounts you will need to have with so many other brokers to be able to execute 30 trades in parallel in all those different exchanges, putting on the side the currency exchanges, putting on the side the fact that you will need to do fundamental research on all those companies, where now if you trade ATI, one shot, you're exposed to that. And that's why I'm calling it a little bit of a golden nugget, okay? The most active times are 9:30 a.m. to 4:30 p.m. That is local Singapore time. And as we said, the index is made of 30 highly traded technology and tech-related companies in APAC, okay? Currently, as you saw, China is 37%, Japan 24%, South Korea and Taiwan is close to 20% each. And the key of this product is dynamically reconstituted every quarter. So you are always in tune with the most relevant companies of the index. Again, if you had to do this manually, it would be so tedious, but having it all under the umbrella of ATI as a one product, it's certainly, you know, again, smart. It's a smart thing. Knowing that this is the characteristic and the nature of the product, so let's get into trading techniques, okay, which is what I'm going to be more excited to share with you guys. So let's first think about, okay, so now that we know we have this golden nugget available for us to trade, how can we approach those trades, or why would you even, you know, get into trading this type of product in a swing trading type of style? Again, I believe that probably everybody listening understands what I mean if I say swing trading. Basically, we are talking about holding trades for either a few days, maybe a few weeks. You know, so you get into a trade and maybe it's a 4-day trade, maybe it's a 2-week trade. That kind of duration is what we call swing trading in most cases, okay? So take a look, okay? And again, I will look at the charts real time in a minute. At the moment, let me share with you for the first time a chart with ATI. This is the index itself, so ATI. This is a daily time frame, okay? So you can see the dates on the bottom horizontal scale. And if you were to look at the day when the index was created, which was April 26, which had a closing price that day of 5187.375, and you were to look at what is the lowest price it reached and what is the current price, okay, at the time of the screenshot. So you could do a little bit of math around that and thinking as a swing trader, okay? And first you will realize that on the way up, if you had purchased at the bottom, okay, and again, this is just an estimation, you would have made 7.73% if you close the trade at the current price at the time of the screenshot. Where if you had purchased on the closing day, let me rephrase that, on the closing price when that contract was created, and you did wait until today, so that trade will be down by 2.59%. So why are those metrics interesting? Well, those metrics are interesting, you know, and you will understand why I was calling it a golden nugget, because if you were to compare ATI with the US Technology Select Sector Index, which is what everybody talks about in the world. When they think about technology, they will think about the Facebooks of the world, the Amazons of the world, the Googles of the world. By the way, nothing wrong with those companies, of course. But if you were to plot the index that represents those companies, and you were to do the same type of math, looking at April 26, and you were to look at the lowest price it went, and you were to look at what is the current price, and you were to do the same math, you would then realize that, you know, it went down by 2.55%, which is about the same, but when it went up, it's much less. 6.85% compared to 7.73%, okay, in let's say a month or so. Well, if you analyze it, it's really powerful, and this very likely has a lot to do with the fundamental analysis that is being done behind the scenes by ICE when it comes to putting the index together, and that rebalancing that we've been discussing, making sure that the components of the index are the most relevant as possible, the healthiest companies from that fundamental point of view, okay, which in this case we can see here translated in pure technical performance, if you wish. Okay, so again, for you guys out there, swing traders looking at being diversified, looking at being exposed to the tech industry, certainly this math may open your eyes, and I would say it's gonna be worth it in your asset allocation strategies, in your trading strategies themselves, in your way of thinking of diversification. It would be interesting for you to do a little bit of homework beyond this presentation, so you get to assess, okay, how well ATI can help you, which indeed it looks like it could be very helpful, isn't it? Anyway, changing topic now to give you the complete opposite angle, okay? And by the way, guys, feel free to comment, ask questions, because so far I see you may be making notes and interested in the topic and so on, and paying close attention, okay? But feel free to comment or ask questions already in the chat box, okay? So I'll be reviewing all of that later on, okay? Anyway, so why is it that we saw these beautiful metrics, right? So the dynamic nature of the index made of fundamentally advantageous stocks made a difference in performance. The MAS regulated ICE Singapore Exchange environment makes a difference as well when it comes to safety, because it's not like now you're going to be trading those 30 stocks independently yourself with different brokers in different exchanges with different currencies. All of these create risk and more need for control. The fact that all is traded in one product in ICE, and ICE is regulated by MAS, it's a great and safe way on how to do it. And on top of that is capital efficient. Why? Because you have different countries built in the index, different currencies built in the index, different regulations built in the index, different trading times built in the index, and more. And all of this in the end, for us as traders, translate into I take one trade and I get all the benefits in one shot. So really smart for you swing traders to go take a look, and I guess you are with me on that. Now, as I was saying, let's change topic. And while we are still discussing ATI, let's look at it from a day trading point of view. Okay, so now let's say you tell me, okay, that's great that we can swing trade it, but my style of trading is, I want to be in and out. I'm an active trader. I am fast. Okay, I don't like to hold my positions for a long time, and I want to be more active. Okay, so let's say that's you. So, well, first know that any trading technique could be applied to ATI, just like if you were to trade any other product, for sure. Being a new product, I would recommend you to go ahead and practice your trading technique, back test it, take a look at your current techniques on how to trade, how do they apply, especially because that you have certain characteristics that are unique to ATI, like the times of the day where you have activity, the times of the day where you have the best liquidity. So just make sure you take a look at your trading techniques and see how they apply, how they perform. Knowing that, of course, it's a fantastic asset. I mean, it's made of the most relevant tech companies in APAC. So for sure, you can get technical, you can apply technical analysis, you can use technical indicators, oscillators, you can apply, I mean, you name it, any trading technique out there, okay? But today, what I'm gonna teach you very specifically is to take advantage of daily gaps. Why? Because it's kind of an easy way to approach it that does not require too much of your time, and it's very easy to create a routine out of daily gaps because they happen every day. So every time you sit in front of your computer and you are ready to begin, a gap happens, and now you know what to do based on a set of rules. So it's something I personally appreciate, and hopefully this presentation will open your eyes to how you can do certain things. Now to do this, okay, addicted to it, love it. So to do this, the first thing we need to do is make sure we kind of speak the same language, okay? And in this sense, I need to add two definitions before I get into charts and I show you how the methodology would work. The first definition is what is an inside day and what is an outside day. And by the way, different trading books may define it differently. So again, we need to speak the same language, okay? Yes, ATI is an index, but ATI also is a futures contract, which is tradable on ICE Singapore that tracks the index. So you could actually trade the index. You can use it beyond only doing technical analysis on the index. You can actually trade it thanks to using futures contracts on ATI, okay? So, again, inside days and outside days, okay? So my definition of inside day is an inside day, and now I'm just reading, it's a trading day where price gapped either up or down, okay, instead, okay, within the prior day open and the prior day close. And you know, when trading begins, not only you had the gap, you know, within the prior day open and close, the trading action remains within the prior day high and low. And again, I'm going to show you that visually on the chart in a minute, okay? But I do need to lay out the definition first. What is an outside day? Well, an outside day, it's the opposite. It's when price, okay, had gapped beyond the prior day open or close. Okay, so instead of within, it's beyond. So you have some, you know, impulse, some sort of a push, bringing the prices far. But we don't trade it unless it goes not only beyond the prior day open or close, but also we wait for price to go beyond the high or the low from the prior day. So in other words, you have this gap, which is already powerful. On top of that, the continuous price action following the gap goes beyond the prior day high or low, meaning that probably you're going to have a very strong day in one direction or another. Okay, so knowing what is an inside day, another way to think about it is quiet. Knowing what is an outside day, another way to think about it is potentially strong day. Okay, so knowing that, okay, knowing what to expect, okay, in an inside day, price should have the tendency to bounce up and down, reacted to support and resistance levels without displaying a clear trend direction. So in quiet day, it's a summary of what I just said. Outside day, price should have the tendency to either run and expand in the direction of the gap or reverse violently in the opposite direction. Okay. So yeah, I just got a message with audio connection lost. Could you guys please confirm that sound is good? Just to make sure all is good. Yes, thank you so much.
Yeah, sounds good on my end.
Thank you so much. I just had a pop-up message, so I just wanted to confirm. Thank you so much. So an outside day would be one of those days where price would either, you know, gap and run, if you wish, okay, just have a very strong day in that direction, or reverse violently and give you very strong speed of movement in the opposite direction, okay? So knowing what to expect would position us now to be ready to take advantage of those daily gaps, okay? So let me show you that first on 3 screenshots, okay, that I have on the slide deck, and then we'll move on the real-time charts and do that live, okay? So we know, you know, what today, you know, would be done, okay? So in this chart, we can see the last candle on the right. This is a daily time frame, by the way, and we can see that the chart, the opening price of that candle happened to be within the prior day open and the prior day close. So that it's telling you inside day. That's an indication of an inside day, and therefore the expectation would be that price would remain trading, you know, range bound within the prior day high and low, okay, which is that high and that low, okay, which, by the way, you can see this didn't happen. Actually, it went beyond, okay, it didn't happen, it went beyond, okay. So again, the fact that something has the tendency to happen doesn't mean it's always going to happen, okay. And the reason why I brought in this example is because you need to understand, number one, that everything I'm going to show you could create profits but also losses. So all the trades would be protected with stops, okay, so we are safe. But second, the other reason why I brought in this first example is because while something bigger than expected could happen, I am, okay, and you could as well if you follow this training. But I am going to be conservative on how I set my targets. So I may expect the market to move to, you know, a bigger degree, but I'm going to take profit sooner than that. So that way my probability of collecting a profit is higher, instead of the probability of collecting a disappointment is then higher, because you expected the market to go that far and it moved in your direction for a while, but then never reached your target. Okay, so I'm going to be conservative in that sense. Conservative, or if you allow me to reverse the term, I'm going to be aggressive taking profits. Okay, so take profits relatively soon while I manage my risk and while I keep a decent reward to risk ratio, as you are about to see. So much to share in a short presentation. Okay, guys? Anyway, so take a look at what we've done. Okay, let me zoom in. So what we've done is we took, because we know when the price gapped here, we knew it was an inside day. So we took the prior day high and low, okay, and from the prior day high and low, we draw fib retracement lines, okay, which are all those little blue lines that you can see. Okay, now what did happen? Okay, well, if I zoom in again, so what happened is that you can see price kind of reacted to this bottom fib, found support around that price level, which is 48.5321, and I know it's very difficult to read. It's too small, but it's okay. It's written here, so you can read it. Okay, and then what you saw is that after finding support, and that's the triggering condition to take the trade, price now reaches and surpasses the next fib level. So price reacted to the fib and then surpassed the next fib level. So what would that tell you? That would tell you that there is decision in price movement in that direction, and therefore the target would now be the high of the prior candle, which happens to be the high and the open. Okay, in this case, you would go for the open. Okay, but in this case, the high and the open goes for the same, and is the same, and therefore that would be the target. So this trade indeed was profitable because, you know, you bought at this price and you ride it, you know, this trade until here, which is kind of like you caught, let's say, 25% of the daily move in one trade. Okay, so again, I'm going to give you more examples of that. Okay, and I got more details here. Okay, so a confirmed entry and a permission to trade will be granted when price surpasses the next fib level after finding either support or resistance. If price started going down, reacting to a fib, when it reaches the next fib and surpasses it, that's when you would go short instead of going long. In this case, it was a case to go long. So what is the result of this one trade? Well, we went long at 48.61.5. Okay, 41.68.5. Again, it's you know, it's difficult to read, but is the second blue line. Okay, the first blue line was 48.53. Okay, so we went long at 48.61.5, which is slightly above, as you can see, which is the second, the next fib retracement, whatever fib retracement it is the next one. The target was 48.86, okay, which 48.86 is the open of the prior candle. Okay, that would be the target. Okay, because we expect it to be an inside there, remember? So we don't expect it to surpass. So it did, but we didn't expect. So we went for the conservative target, and then you took the distance between those two values, okay, 96 and 61.5, and divided this by 3, okay, and that will give you the distance below at which to have the stop, which would be 11.5 points below, which is 48.50, and that will give you a 3-to-1 trade. So if you do this trade, you were risking a third of what you would make. No matter how many contracts you traded, you know, since the distance to the stop is a third compared to the distance to the target, you would have risked a third. To be specific, if you did one contract, so remember the margin per contract is $460 something. I'm just running it up to 500 US. So let's say the margin is 500. And we know from the contract specifications that Ian presented for us that the minimum fluctuation is 0.5, the multiplier value is $1. So every 0.5 on the chart, you make $1. If it goes your way, you lose $1 if it goes against you. So because you went from 61.5 to 48.50, if you were stopped out, you would lose $23 per contract. If you were wrong, you would make $69 per contract if you were right, which that implies a 13% of return on margin, given the fact that you are using $500 on the trade during the life of the trade, and that this trade made $69 in less than 1 day. So that is 13% return on the margin used for the trade. So again, this is just an example. We're going to see more examples because we learn through repetition, okay? But hopefully this example number 1 makes sense. And this is an inside day, okay? So what if you were going for an outside day? Okay, so take a look. This is just, a couple of days after, I believe, on the chart. This is another example. And what just happened here? So what just happened is that you can see price closed here that day, and the next day price gapped, okay? And there is a little bit of space there, okay? It's just a tiny bit, but the fact is that the next candle opened beyond the prior day open and close, okay? And therefore, it's an outside day, okay? It's an outside day. So what do we do when we have an outside day? Well, now we're gonna work on Fibonacci extensions, okay? Not Fib retracements, but extensions. So what I've done is go from high to low, and then low to high, and then apply it to the open, okay? I'm gonna do that with a real-time charts in a minute, but when you do extensions, you need 3 clicks on the chart. When you do retracements for inside days, you need 2 clicks on the chart, okay? So extension is 3 clicks. So, what I've done here is, using the prior day, okay? So from low to high, and then the open, so 1, 2, 3 clicks, or from high to low, and then the open, so that's 3 clicks, okay? In the opposite sequence, but it's still 3 clicks, and that created those Fibonacci extensions above and below. So again, being conservative, this is going to be my target if price moves higher. This is going to be my target if price moves lower, okay? This is going to be a target if price moves lower. In this case, price moved higher, so the action would be a confirmed outside day condition and a permission to trade will be granted when the price surpasses the prior day high or low. Let me zoom in one more time. And I know this is lots of information. That's why I can send you the slides if you need to. That's why as well this webinar is recorded, and Phillip Futures will make it available for you so you can review. But remember, because the gap was above the prior day close, it was an outside day. But the trading condition is only allowed after you surpass the prior day high, right? So in other words, this is the price at which you take the trade, and this is where your target is, which, percentage-wise, if you look at it, it's kind of like capturing like 30 or 35% of the daily move in that case. Every day is different, by the way. Sometimes it's going to be 10% of the daily move. Sometimes it's going to be 40% of the daily move. So every day is going to be different. And sometimes it's going to be a profit, sometimes it's going to be a loss. As I will show you later, I will show you losses too. Okay, you need to understand how it works in both cases. So in this case, you will go long at 49.58, which is the first tick above the prior day high, okay, on that last candle. So you will go long right there, okay? And the target would be 48.98, okay, which is the first, extension line. And the stop would go below your entry by a third of the amount of profit you're about to make. So if you're gonna buy at 88, sorry, you're gonna buy at 58 with a target at 88. Okay, so if you think about it, do the math, easy math, that's 30 points, correct? So a third of that is 10. So my stop is gonna be 10 points below the entry. The entry is 58, so my stop is gonna be 48, which is 10 points below, which is a third of the profit that I'm gonna make if I'm right. So if I'm wrong, I lose a third, and if I'm right, I make 3 times more than the money I put at risk. So this was a winner. Okay, great. What's the math? So the margin, remember, to be able to take the trade, you need about $500 per contract. We saw the ATI point value is $1. So sorry, the tick value is $1. So the risk per contract in this case is 20. Why? Because you have 10 points of risk. 10 points of risk, it's 20 ticks, because every tick is 50 cents, right? So you got 20 ticks. 20 ticks times 1 is $20 of risk, okay? And if you get to your target, then you would have made $60 of profit, which is 12% of the margin used, okay? So return on margin 12%. So again, it's quite powerful, guys, okay? And again, do these with 5 contracts, do these with 10 contracts. Again, position size is something particular and unique of each of you, because everybody has a different risk appetite, everybody has a different account size, everybody has different risk management rules when it comes to how much risk per trade, how many trades you take in parallel, things like that. Maybe you had traded the mini index futures, the mini dollar index futures with ICE. Maybe you were trading the Bitcoin futures with ICE, and because you were running those trades already, you could not take the trade with ATI, or maybe yes, depending on how many trades you allow yourself to trade in parallel. So everybody's going to be unique. That's why I'm doing the math per contract. That way you guys can do the math for yourself in your specific case, and hopefully this open your eyes to understanding how futures works, in case you have not traded futures before, in case you trade any other tradable product. So futures trade in ticks, okay? That's why I got the tick value here to be $1. Anyway, so what about the next day? Okay, so here's a day where actually you got 2 trades, because this strategy allows you to take a trade or 2, because there are 2 directions, going long and going short. Okay, inside days you expect the market to be range bound. Outside days you expect it to expand or reverse violently. So if you think about it, the 2 examples I show you now are simple. It was 1 trade at a time. Okay, do you have an auto robot to trade ICE? I don't personally, David. I would do this manually. Okay, to be honest, you could automate this. Why not? But at the same time, this is really not a methodology which is time consuming. So to me, it's actually fun to do it manually, to be honest, in this particular case. Anyway, so ready to take a couple of trades here, right? So opening price in this case is beyond the prior day open. Okay, so if I zoom in, okay, the prior day close was here. Today's open is beyond the close or the open from the prior day, so it's an outside day. Okay, it's an outside day. Okay, so what would you do? Then you would apply fib extensions, okay, like we did before. Of course, because the prior candle is so tiny, all the fib extensions are going to be very much compressed. Okay, so that day is a day where maybe you only catch 10% of the daily move, because everything is going to be more compressed. Given the fact that the volatility on the prior day is less, you would expect the volatility that follows to be less. Okay. Again, that's the beauty, is that the fibs will calculate themselves for you. So you have the fibs above and below. And again, what would you do here? Okay, well, same story. A confirmed outside day condition and a permission to trade will be granted once the price surpasses the prior day high and the prior day low. Okay, and by the way, I'm noticing that I'm running a bit late with time, guys. Sorry for that. Let me try to explain this quickly. So notice that this is the prior day low, and there was a moment in time where price went below the prior day low. Okay, so it was time to short. Okay, but we didn't reach the target, so we shorted. It was in profit for a while, turn around and stop us out as it was going higher. So we were stopped out on the way out, but then later in the day it went above the prior day high, and that allowed you to take a trade here with a target to be the upper line, which is very close target, again, because that day it was a day with less volatility or less expected volatility, and therefore your target was nearer. So you can see that that day was a day where you had 1 profit and 1 loss. Right? It's not always going to be profits, but again, this is trading, isn't it? So you shorted at 48.11, which is below the prior day low. The target was 48.05, which was the extensions, okay, also known as projections. You took the distance between those two, divided by 3, that would be your stop, located above. Okay, so you shorted at 11, the stop was above at 13, and you got stopped out. Okay, so you lost 2 points on that one. And then you took the trend number 2, which was to go long above the prior day high. Okay, you were expecting the market to reverse violently, right? So you took the long at above the prior day high at 48.37 with a target to be 48.40, which is the next fib extension. You can see like 2.5 points distance. Okay, so it's not too much. That there was a low volatility day. That's what it is. So stop 48.33.5, which is a third of the distance projected below 48.37. Okay, and the result, that was a winner. And that's how it goes. Okay, so again, I want to show you that in the real-time lag charts, okay, which is going to be more fun. The reason why I had all of this on the slides is that you guys, if you ask for a copy of the slides, you can have it and you can review it at home, because I understand that this is a lot of information in little time, even though I wanted to share these guys because I believe it's powerful for you guys. So I'm going to look at the live markets, but also, as you can see here, it says get your phones ready to take a few screenshots of QR codes, okay? Because I told you I had some bonus resources for you guys, and the best way to get those resources is to just scan the QR code. So it will send you to a link, so you can get more stuff to reinforce what you're learning today about ICE products. The first bonus resource, it's a YouTube video actually. So you can either type the link youtube.be/KNIW blah blah blah, or easier, scan the QR code. That will send you to a YouTube video where we talk about all the products in the ICE exchange, and you will learn the times of the days at which the trade, the point values, the margins, the whole thing about ICE products. So you will learn it well there. You can certainly consult the website of ICE, but maybe more fun for you to watch a video. So take a look at that one, and hopefully you had time to scan the code. If not, I will come back later so you can scan it. Most importantly, for the ones of you that have never traded futures before, or you are looking to take your education to the next level, know that ICE Futures Singapore is actually sponsoring, is a financial sponsor of one of our courses, which is our futures course. This is a very, very, very complete course. This is hours of learning and training. It's on demand, so you can watch it at your own pace. It's made of very short duration videos, so you can watch it on the MRT. You can watch it as you go in places, and little by little learn. But the course is really, really complete. Okay, and you can see here the 50% reduction thanks to the financial sponsorship of ICE Futures Singapore. So this is the direct link to that special link. You will not find that if you go to our website and you start clicking around. You will not find the link, but if you use the QR code, you will. So take a screenshot, okay? And if I went too fast and you didn't have the time, I will go back later to that QR code so you can take the screenshot, okay? But anyway, let me jump into the charts. So at least I can do one more practice, in this case, real time. And I'm gonna widen the charts the most I can so you guys see everything with lots of detail. So let me bring ATI. Here is ATI. Here's the protagonist of the day. So this is ICE Connect. This is a charting software provided by ICE. Okay, you guys will be trading ATI on Phillip Nova. So it's going to look the same, okay, even though I'm using a different charting package here, but it's the same story. In the end, you get the chart. So this is a daily time frame of the ATI index. And what I'm going to do here is I'm just going to expand it as much as possible to make it as large as possible, so it's very well seen. So take a look. Okay, first of all, the first thing that we need to do is to find out if today, which is this candle, right, which is your trading day, the first thing we need to find out is if it's an inside day or if it's an outside day. This is done by looking at yesterday close, okay, and where today's open took place. And obviously today's open took place within the prior day low, sorry, the prior day close and the prior day open. So because it's within the prior day open and close, so it's an inside day. Okay, it's an inside day. So what would you do when it's an inside day? So you would find your fib retracement, not extension, retracement. If it was an outside day, you would do extension. And what you would do is you would just apply this to the prior day, okay, from top to bottom in this case, because it was going down, so from top to bottom. And here are your fib lines, okay? And what would you do? So you would look for price and you would wait for price to define itself, okay? So let's say price started, okay, trading, and went up, 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 and notice how it stopped where that fib line is, okay? So it found resistance at this level, okay? It found resistance here, okay? And you know it found resistance because it didn't go higher, so that's resistance. And now it's coming back down, okay? And let me move my mouse. Okay, see, this is better because I was actually with a gray line. I was actually hiding the red line, which is the wick of the candle. Okay, so now you see, now it's better. So you can see price went all the way to this line, okay, stopped and started going down. Okay, so what would you do? You wait for price to surpass, okay, surpass the next Fibonacci line, and the moment price surpasses that price, okay, which it's here, right here, okay, and if I zoom in, okay, it's 50.65, okay, 50.65, okay. So you would short at 60. Let me say that again. You would short at 50.65, okay, with a target being the prior day close, okay. So this would be your entry short, okay. This would be the distance to your target, okay, which is, you know, let's call it, you know, 20% of the daily move, something like that. And your stop would be a third above. So when price came here, okay, and surpassed the line 65.36, at 65.00 you would short. So you would have shorted at 50.65.00, okay, with a target located where the prior close was, okay, which is right here, okay. So what's the number? Let me find out. I need to put my mouse in here. So the prior close was 50.54, okay, 50.54, okay. So you can see in that particular case, and that's the downside. And again, I'm showing you real-time data, so it's what it is. The downside of inside days is that normally, you know, the room for profit is less. Normally it's more exciting, if you wish, when it's an outside day, because you have this potential for an expansion, okay. But anyway, in any case, you had that opportunity, okay. Also, same story, and this you will need to be watching price action, okay. Let me zoom in one more time. So you will need to be looking for price action, okay. Let's say now price is coming down, 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 and you can see support has been found here. Why? Because it went there, surpassed it a little bit, now it's coming back up. So what would you do so far? Nothing. But what if it comes to this next fib line and surpasses it? Well, now you will want to go long at this price, which is 50.47.5, okay, 50.47.5, with a target to be the open, okay, and with a stop to be a third below. And if you are with me on that, so now we are talking about 70 something to 40 something. So now you are going to make, you know, 25 points or something like that, which is obviously much more decent than, you know, a couple of points. So again, every trade is going to be different. Sometimes the market is going to be more volatile and give you more room for profit. Sometimes the markets are going to be less volatile and give you less room for profit. Sometimes it's going to be long, sometimes it's going to be short, sometimes it's going to be 2 trades a day, sometimes it's going to be 1 trade a day, sometimes it's going to be 2 winners, sometimes it's going to be 2 losses, sometimes it's going to be 1 winner, 1 loss, sometimes every day is going to be different. But the beauty is that with this technique, every time you lose a third. Every time you profit 3 times more. No matter the distance to the target, no matter how far the target is, you always maintain that reward to risk ratio, and therefore through time that should help efficiently in the risk management, and therefore keeping you on safe and on the right side of the market. Okay, and I'm gonna have to stop here, guys, because I surpassed the ending time of the webinar by 5 minutes. I mean, we'll be in more webinars together, guys, so we can certainly keep talking about this. You know, I welcome you guys to explore it on ATI. Sri, Ian, you guys, everyone, any final question out there?
This is Sri. Thank you for being a wonderful audience. Okay, rest assured that if you have any more questions, just feel free to type them into the question box, or you can send them in the survey form, which we will receive right after the webinar, and we will send them to Jose, and he will give you his 2 cents with regards to the question. Okay, so don't worry, you can still send your questions over. Ian, can I just do a quick request? Would you be able to show for the Asia 30 Tech 30 Index? Would you be able to show the companies that are in the index or companies making up the index?
Sure. Give me one moment here.
Let me give you sharing rights, okay?
Mm-hmm. Are you able to see my screen now?
Yes, we do. But we see it.
Yes, but it should be the other screen.
This is great now.
All right, thank you so much, Ian. These are the companies that make up the ICE Asia Tech 30 Index. You can have a good look at it, or you can click on the webinar recording in our follow-up email and catch up once again. Okay, thank you so much, Jose and Ian.
Okay, thank you.
Thank you so much, everyone.
Really
It's been a pleasure. Take care, everyone.
All right, thank you so much. Have a good night and stay safe, everybody.